What's going on, traders? Sandro O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is February 14th, 2022. Let's talk about these markets, how I went about trading them, etc., etc. Happy Valentine's Day, everyone. So before we jump into this video, quick first disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk management. And last but certainly not least, do not YOLO your account to any one of my trades or anyone's trades for that matter. All right, let's dive in. So these box scores, take a look. If you were just looking at this at the end of the day, you'd think, wow, what a contraction in volatility from Friday when all of these indices were down about 2%. You can see we had S&P 500 finish down 0.35%. NASDAQ QQQ actually finished positive, up 0.12%. IWM small caps were down about 1/3%, as well as the Dow Jones just over that. And then this ARK Innovation ETF was down 0.71%. Looking at the closing ranges, you can see this was all over the map. So we had ARK close towards the bottom end of its range, as well as the small caps. But the SPY, the QQQ, the Dow Jones, they were pretty much smack dab in the middle. And actually all three of them were past the middle of their range. Volatility spiked in all of these indices. You can see the VIX finished out plus 5.12%. It is still trading very close to that 30 level. So there definitely is some panic in the market on this Valentine's Day. Overall breadth in the market was negative. Best breadth was in the NASDAQ with 37% advancers. Finviz heat map, take a look at this. Tesla was positive, Amazon, Google, Nvidia, some of these semis as a whole. And then you can see these are the two biggest components of the S&P 500. Both of these bad boys are about 6 1/3% each. So combined, they're about 12.5% of the market, and they were both essentially flat. So what I saw was pretty much all the stocks that quote unquote matter, the really big names, those are pretty much all trading up aside from Facebook. But other than that, pretty much every other component of the market was very weak. And take a look at these energy names. I actually have a small short position in energy via put options, and those actually flipped from red to green today. Let's take a look under the hood at our sector map. And wow, did you look at this? The gold miners are our top leaders, followed by cannabis stocks. So gold miners were up over 2%, cannabis just a smidge, up 0.21%. Some other strong areas for today's session were transports, innovative technology, the mobile payments, consumer discretionary, and semiconductors. Everything else was a bloodbath. Worst performers on the day. Energy was actually the worst performer. So I think that's kind of encouraging, given that a lot of the fears we're seeing in the market are due to inflation and also due to the geopolitical risk of a potential Russian invasion of Ukraine. So geez, today there was a lot of intraday market movement. At certain points in the day, it felt like the market was going to rip to the upside. At other points, it really felt like we were cascading to the downside. Style factors. Best style factor was growth, up 0.07%, but every other style factor was down. Worst performer was high beta, down 1.07%. And we also had momentum down 0.77%. Some of these international style factors were down as well. So let's talk about some of these big catalysts / tape bombs, whatever you want to call them. The Federal Reserve had a board meeting today, and it was scheduled for February 14th at 11:30 a.m. And there were some rumblings in the marketplace that maybe the Federal Reserve would do an emergency rate hike at this meeting. I never really thought that was going to happen, but it does seem like, in light of all these geopolitical events, in light of the high inflation prints that we're getting, it sort of makes sense that all these Fed governors are meeting up. I'm sure they want to just get more unified in their messaging and really just come together and be like, what are we actually doing here? Because Bullard sounds a lot different than Mester, and they're all pretty much singing a slightly different tune. The other catalyst that happened today was James Bullard was on at 8:30 a.m. on CNBC, and we didn't really get much of a difference in response from Bullard. Basically, he said, hey, we're going to have 100 basis points of rate hikes by July. And most people that I talk to, they're like, oh my gosh, did you see he announced that? But there's already 100 basis points of hikes that are priced into the curve. So that actually is nothing new. I do think that with how heightened volatility is right now and how offsides a lot of long investors are and just how jumpy everyone is, you can say something that the market's already aware of that's bad, and the market will still kind of have like a knee-jerk downward reaction to it. So yeah, this board meeting ended up coming and going. Same thing with the Bullard catalyst, and both of those were sort of non-events. What I will say is that overall, I would say the market's being pretty resilient in the face of just negative catalyst after negative catalyst. This was the other big negative event that we had, because remember, overnight the market was pretty weak. And then there was a headline early this morning, and it was basically Ukraine officials say essentially like positive sounds coming out, like, hey, Russia might not invade. Then we got this headline in the afternoon, Russians in attack position. You can see this from CBS. Russian units near Ukraine moved into attack positions, official says. Then there were headlines saying Russia's going to invade Ukraine on Wednesday. Then a Ukraine leader, there was a soundbite saying, yeah, he thinks that Russians are going to come in on Wednesday. Then later in the day, there was a soundbite of him saying, hey, I wasn't being serious about that. I was being sarcastic. We don't actually think the Russians are going to move in on Wednesday. So the whole day, we were just kind of gyrating around on all of these headlines on this elevated VIX. And overall, we really did not make much progress in the market. Let's take a look at these headline indices. The ES futures, look at this. They continue to move in the after hours. But look at this. Overall, right now, they're trading down 0.26%. So for all of these events, catalysts, headlines, tape bombs, the overall market didn't really make that much in the way of a move. My trend model is still at a -3. So that is telling me don't be too aggressive here, because the overall weight of the market is to the downside. And I will say, in a market like this where headlines are dominating and you're in an environment where the VIX is so elevated, technical analysis is going to have a limited signal value. What I mean by that is, even if the chart looks great, it's like, look at these candlesticks, they're all lining up perfectly. We have to remember the limitations of trend following. If the market's moving on headlines and a bad headline comes out, it's not going to matter what the candlesticks look like. Same thing, it's not going to matter if dark pools were accumulating. If we get a headline that says, you know, for an extreme example, nuclear bomb hits Ukraine or something like that, that would never happen. But if there's a bad catalyst, the chart does not matter. Same thing if there's a market where everyone's worried about a Ukraine invasion by Russia or Federal Reserve rate hikes. If we get a headline that either of those negative catalysts are negated, it's not going to matter if the chart looks really bad. The market's going to move off of that headline. So in this kind of market, it's okay to just be like, I don't know which way the market's going to go because I don't know the next headline that's going to come out. And really just get up from the screens. I actually spent a lot of time away from the screens today. And I must say, it was definitely for my benefit. Because on a day like today, unless you're really just like scalping and going crazy with day trading, you know, there's really not much you can do when, you know, are we going to war? Are we not? Is there an invasion? Is there not? Is the Fed going to just like pull the plug on us or not? There's just a lot of uncertainty. So VIX, you can see it went all the way up to a 30, almost a 32. But then sure enough ended up forming a red candle and actually closed on the lows. So this is certainly an encouraging sign. But again, come Wednesday, if Russia invades Ukraine, it's really not going to matter. So we're really just waiting on these binary events. Let's look at the NASDAQ. NASDAQ trading up 0.17% as of the after hours moves. And we made an attempt to tag this monthly value area low and we were rejected right off of it. But overall, we put in a doji candle. So it just seems like market participants are like, we have no idea what's going on either. And of course, we're just not really getting that much of a move. Russell 2000 is actually showing some relative strength here. It finished down 0.3%, but it is still trying to hang on to that 20-day simple moving average. And it is hanging on to this monthly point of control. And we'll notice some of these small cap names are doing pretty well. So let's take a look. These are our watch list names that I sent out to all Pristine Capital members over this weekend. I typically spend, I'd say, about like 12 hours every weekend working on a watch list video and also working on a weekend market analysis video. And take a look, some of these names actually performed pretty well. Asana was one of the big winners today in the market. This was a name that we captured on our watch list. Another element to the watch list is I try to keep it to less than 10 names. Sometimes there's only 5 names on it because there's really no point in whittling the market down to like the 30 best opportunities for the upcoming week. I always try to keep it very tight. I ended up taking a trade in Roblox today, and Asana I did not take, but that one had the best run out of the entire group, had about a 10% run in a really weak tape. So let's take a look at some of these names that were sort of bucking the trend of the market weakness. Asana, yeah, this one finished up 11.53%. This one had nice insider buying by the CEO about a week ago, and you can see the chart has really shaped up ever since. And this one essentially hit our target that was outlined in the watch list. So looking really good. I ended up taking my trade in Roblox. And this is one that I actually want to hold into the earnings print. So I entered it pretty much right off the open. I came into the session knowing exactly what I wanted to do. And once I executed on that, I pretty much walked away, and I checked in periodically. But I was like, hey, this is a tape bomb of a market here, and it's better to just wait for that clarity into the close. So you'll notice, let me take a look at these. So I entered some Roblox common shares for 68.10. I put holding through the earnings release. Now, for a lot of investors, or traders rather, they don't want to hold through earnings because there is significant earnings risk. For this stock in particular, I actually want to hold it through the print because this stock has a history of really outperforming on earnings. For whatever reason, there's a lot of negative narratives about Roblox, so like the user base, they're all going to leave, and like it's just a fad of a video game and all this stuff. I saw they did a really nice partnership with the NFL, and I just think there's a lot of pessimism that's baked into the price of this stock. So I think this is the perfect one to take a shot at into the print, because I do think there's some asymmetry given how far this thing is corrected. And you can see we have this point of control up here at 80.1. So I knew I wanted to get that on and hold it. They report earnings on Wednesday after the market close. I know I'm going to be holding it until then. So I figured, hey, I'll put this one on even though we're having a lot of these geopolitical tensions. So Roblox, put that one on. Let's take a look at what else we had here. And then I did one options trade. I entered some SPY February 18th, 440 calls for $6.12. And that is really just in case we can actually resolve to the upside. Right now I'm in about 50% cash. I figured let me get sort of like a lotto call position on the books, just in case we end up holding some of these levels and we make another run at this 20-day simple moving average. Let's also take a look here. So we have the seasonality. We've talked about this. We are approaching the seasonal peak in February. And let's also look, one other thing I wanted to share is take a look at this put option activity for today. This is highly elevated. So take a look. We were above a 1 for most of the day. So I think by and large, a lot of these fund managers, they're essentially forced to buy protection on days like this because no one wants to get caught. If Russia does actually invade Ukraine, no one wants to be caught with their pants down with no put options on the book. So I'm certainly going to watch for that put to call ratio as it comes out later in the day. So overall, very choppy day. Let's take a brief look at the options order flow and see what was going on here. So we'll flip over to our options race, take a look at today's combined flows. Let's see, we have, wow, SPY's actually leading over Tesla, at least for part of the day. This is pretty unusual to see that much volume in SPY compared to Tesla. Let's see what we got when we look at our TradeScape. So it's the SPX. We have some big call options going out. These are always so odd though at the 1100 strike. Very tough to tell what those are for. A lot of times they're for like an exotic derivatives trade. Then we have SPXW. A lot of puts going up here at that 44 strike. I did notice 4400 strike. I did notice a lot of these going up when I was just watching the flow intraday. SPY, mostly put options going up. So it is remarkable that we have all these put options going up, but today at least the market really could not break to the downside. Take a look at this before we break. I want to keep these videos a little bit shorter now. Take a look at this. So if we go to SPY and we go to our hourly chart, look how wild this was. This was just a chop fest, right? I mean, look at it. We were down, then we were up, then we're down, up, down, and then we closed somewhere around the middle of the range. So I think this is the perfect environment that really can frustrate you if you're too bearish or you're too bullish. So in this environment, I'm keeping a nice healthy cash balance and just being aware that, hey, the market, my trend model is showing that it's at a -3 and there's a lot of unknown catalysts. So it is okay to be like, I don't really know exactly what's going to happen. We're all going to find out together as this week plays out. So looking forward to checking back in with you tomorrow if we have another crazy day. And enjoy your Valentine's Day, everyone. I'll see you all tomorrow.